This is your dose of daily market wisdom with master trader Nick Santiago. Starting from humble beginnings, Nick has been beating the markets for over 2 decades. He shares with you his take on the profitable trades that will have you moving towards financial freedom in no time at all. To see an in-depth review of his track record and much more, go to inthemoneystocks.com.
Welcome. This is your daily dose of daily market wisdom with master trader Nick Santiago. I'm Kerry Lutz, and today it's 4/6/21, and this is show number 239. Well, Nick, we had quite a rally yesterday, and today we get to flat markets, right?
Yeah, today we have pretty much the indexes are just slightly in the green, but I mean very slightly. In fact, the NASDAQ 100 is slightly negative. The Dow is flat, and the Russell seems to be the big winner of the day, up about 0.6%, but everything else is really right along the flat line. So this is common after you get a big rally. Usually the next day will be more subdued, a little bit tame, and we'll see what we get going forward throughout the rest of the week. But the bottom line is the central banks around the world are propping the markets up, and they're really not going to stop. It's going to take an event in the market for them to change course. So I'm not really sure what the event will be or the catalyst is, but I believe it's coming. And last week we saw a major hedge fund blow up called Archegos, but the markets rallied. And, again, that tells me they were well aware of it. They made sure there was plenty of liquidity in the system. And they know these markets are probably on borrowed time.
Yeah, Archegos was really interesting. It's probably over $10 billion in losses. When we started out the financial crisis in 08 and 09, JP Morgan Chase had like $120 billion worth of so-called equity on their balance sheet. And now, I haven't looked at it lately, but certainly it's far greater than that. So $10 billion hit 10, 12 years ago was a lot more devastating than it is today, is the point.
Oh, absolutely. You're 100% correct. And don't forget, if there's a real big hit, they'll just change the rules in the middle of the game. Remember, mark to market and then mark to model. So, there's a lot of accounting things that go on. The problem with this hedge fund is it's hard to believe it's just an isolated one-off incident, that there's just one hedge fund out there that did this. These guys were levered, I heard, 10-1. What's to say others out there didn't do the same thing? If you take a look at the stocks that they were involved in, Viacom being one of them, that stock dropped over 50%, 5 trading days. So is that natural to go from 100 to 45 in, 5 trading days? I don't think it is. It's just hard to believe there's only one hedge fund out there. I was always taught when I got into this business, if there's one of anything, there's usually 100 or 1,000 of them. And, again, I think we'll hear more about this down the pipeline. But for now, it seems like it's just a one-off event.
Yeah, for now. Yeah, I'm looking at JP Morgan's stated common stock equity. It's $250 billion now. So they can take a few hits like this, but one mark-to-market event and their equity could be wiped out in a flash. You get half a dozen of these Archegos outfits blowing up, and there goes their equity. But generally, JP Morgan's ahead of the curve. They're dumping stuff right when all their competitors are waking up to the fact that there's a problem. And no doubt that probably happened here.
Yeah, well, we don't really know, but you have to think that, these guys are very much in tune what goes on in the investment world or the hedge fund world. So, again, they're the clearing firms. They see every trade that comes through. So you have to think they have a little bit of insight or heads up on all this activity. I just found it, rather interesting to see that the market was panicking when GameStop went up, not that long ago, when it was shooting up to almost $500 a share. And there were the big brokerage houses like Robinhood that were in trouble there, and also Interactive Brokers. It just seems like every event just gets to be, solved and fixed somehow, some way.
Papered over.
Really, it's rather remarkable. And these are big events. See, these are not, small events. Anybody remembers long-term capital. I don't know if anybody traded back then like I did, but, that was 1998. And that almost brought down the whole global market, and here we are looking now like nothing seems to faze the markets. It's rather remarkable.
Yeah, nothing bothers it. So yesterday, Treasury Secretary Janet Yellen wants a minimum tax levy on corporations around the world. That's just not going to work, but it just shows the globalist bent of this administration and of her. She's always been a globalist.
Yes, she has been, and more now I mean, just think about this. Basically, she said together, and I'm going to quote her, together we can use a global minimum tax to make sure the global economy thrives on a more level playing field in the taxation of multinational corporations and spurs innovation, growth, and prosperity. I think it just does the opposite. If everybody's going to have this so-called minimum tax levy on corporations around the world, that just changes the landscape. You have no competition. I mean,
yeah, of course.
It just does the opposite of what she just said. I think it will kill competition. It sounds like the OPEC of taxes to me. And, lower taxes could be gone forever if you ask me if this happens. So,
yeah, but it is alarming because it shows the bent of this so-called administration and what they're looking for. And, that is a real negative. But the fact is, a country like Ireland is not going to put in a minimum tax. Theirs is like 8.5% now, which is why every major corporation, especially tech companies, are incorporated there. They're not going to just destroy their economies. This was, I think, a sop to Congress who's saying, you want us to increase the corporate rate, which we just cut, and it's bringing in more money than it ever brought in before. And what about the rest of the world? What are you going to do about them when we start having these inversions again, where companies leave the United States for better tax climbs? I mean, individuals are doing it. They're moving to Puerto Rico, where you get a 4% tax rate instead of a 40% tax rate. So why not, if you're a corporation, get the hell out of Dodge?
Well, corporations have done that. And, when we had the Trump era tax cuts, corporations came back. You saw corporations leaving their countries to come here to do business here. So I just don't get it, how this is being sold as it's going to, create this big innovation, growth, and prosperity complex. I just don't see that. I think it ultimately kills competition. And it sounds like collusion, because I think there are a lot of countries in the G20 that are on board with this.
Yeah, it's just, I don't know. We'll see. She has a tendency to shoot her mouth off, and I'm thinking it's going to go nowhere. It's just like to Congress, oh, don't worry about raising taxes here. We'll get the rest of the world to raise taxes too, and everybody will be happy and nobody will move. But we know that's not going to happen. Hey, so gold and silver, you said the W bottom is in. I think it could be at its low, and it's your favorite chart pattern.
I love that chart pattern. It's one of my favorites ever. I've been teaching that chart pattern for years. It's been some of my biggest winning trades ever in my life have been off of that pattern. And right now we're looking at a really, really good move today, again in gold. And, I just have to go back. It wasn't that long ago. It was really just on the 30th where, I got flooded with emails saying gold is breaking down. You're wrong. I was just over and over. And here we are, with a 4-day surge. At that point in time, just think about this. On the 30th, gold was down to $1,676. Now it's back up to, $1,743. And I think it's headed to $1,800 now. But it's just, and potentially a lot higher. So great move off that pattern. And so far that pattern is playing out as forecasted. And GDX, gold miners, they're up 2.28% today. I have that trade. I've been in that for a while. My second half position, I'm now up over 10% on it. And again, these are a couple of plays that we called out, a while ago and earlier in the month, and in the month of March that was, and they're working nicely.
Yeah, and even silver is following course. It was down to like low $24 range. Now it's over $25 an ounce again.
Yeah, silver at $25.26. It's up almost 2% today on silver futures. And there's been a lot of disconnects, Kerry. That the silver demand is really overwhelming right now. The physical demand. It's kind of strange that we see the futures where they are when you have such high demand in the physical market.
Yeah, it's really kind of shocking, but not really. It's what we've come to expect from a rigged financial system. And the best thing you can do is learn how to use the rigging to your advantage. The best way to do that is go to inthemoneystocks.com. Nick's trade of the decade is still there, but now, Nick, you're thinking that the gold trade could be even better, right?
I think the gold trade has real true potential. If this has to break some levels, but we get through 1,800, the gold bottom might be in, and we could be up to 2,200 in a flash. I'm not making this up. This is how these patterns work. You got to take out certain levels to get to higher levels, but this is a really, really good bottom for gold right now.
Yeah, and we're approaching the summer, which used to be a very dull time for gold, but over the past 3 or 4 years has become a major inflection point annually remarkably for gold, where it puts in close to its annual high at that point.
Yeah, and another thing that everybody has to remember is that gold peaked out in August of 2020. We've been selling off. Nobody's like, gold is probably the most hated commodity in the world right now. Nobody likes it. Everybody wants to be in Bitcoin, and nobody believes in gold. But yet you have, basically $4 trillion, $6 trillion of printed money really since last year, more coming. I mean, if you don't love gold now, I don't think you'll ever love gold if you're a fundamental trader. I mean, the backdrop for gold is incredible. I just love the pattern. That's what gets me excited about the trade now. But I've never seen anything quite like this as far as money printing goes in the world. We've probably, I think, since 2008 have printed more money. I think it's 70% or 60% of the debt has been printed since 2008. I mean, that's remarkable. So, ultimately, I think gold should be a hell of a lot higher than where it is.
No doubt you are correct. And it would be ironic if at the same time Bitcoin was putting in its high, gold was putting in its low, and then they kind of crossed on the chart. We're going to have to start charting gold against Bitcoin next.
We will have to start to do that. And I do look at Bitcoin every day, although I do not trade it. I do not even have a Bitcoin account. I don't believe in it personally. And I've made that pretty open on this program. I just think I just don't see the governments allowing this to go on. But obviously they're prepping us for a digital world, a digital currency, and this is how they're doing it. But yeah, we'll start to track it a little bit more. But right now, Bitcoin is the favored. Well, all cryptos. I don't want to just say Bitcoin, but you have that Ethereum,
sure,
Litecoin, Dogecoin. I mean, there's so many coins. I mean, it's just getting out of hand. But biblical times, since biblical times, it's been gold and silver, and I'm going to stick with the Bible on this one.
And you forgot my personal currency, the one that I'm creating, called Ponzi coin.
Well, I think there's been a few of those out there.
Yeah, but I want to name it Ponzi coin because I think it just has a nice ring to it, and I'm going to model it on the Charles Ponzi plan, where everyone who gets in early gets rich, everyone who gets in late winds up holding the bag, right?
That's right. And again, it seems like you could have the Bernie Madoffs of the world, you could have the Bitcoins of the world. It just doesn't really seem to end. Charles Ponzi might have been ahead of his time there, but I think he took a concept that just continues to repeat itself.
Yes, it does. That's for sure. Well, I think we'll leave it at that. InTheMoneyStocks.com. That's the place to go. Check out the gold trades. While you're there, look at the Twitter feeds at ITMS, at Nick Santiago 01, at Kerry Lutz. Emails to KL@KerryLutz.com. We're getting to your emails, promise. Nick, we'll talk to you tomorrow.
Sounds good, Kerry.
And so concludes another episode of Daily Market Wisdom with Master Trader Nick Santiago. Be sure to go to his website, InTheMoneyStocks.com. Don't forget the Twitter feeds at ITMS and at Nick Santiago 01.